Great. Well, look, first and foremost, it's an absolute privilege being here. Thank you for your time. As I stand now, it's 11:45, so we'll conclude at 12:05. Is that correct? Great, thank you. Right, so energy modelling and planning is somewhat contentious in some aspects, but in other aspects, it's certainly been embraced by both hands in other parts of the world. And looking at the broader picture, we need to understand that aspects such as energy efficiency is simply not enough these days. We need to be looking forward. We need a strategic view as to what we do and where we're heading. And ultimately, at the end of the day, the process around energy modelling and planning is certainly going to give you that depth and the breadth to make the correct investment decisions moving forward. So have a look at some of the aspects that have compounded our situation within South Africa over the recent while. And certainly aspects around cost, right? There's certainly rising cost. In addition to that, we have aspects around energy security risk that needs to be taken into account. We look at demand side programs. I mean, don't be fooled. At the end of the day, these are effectively stick and carrot type programs, right? It's to get the domestic market in order, it's to get the commercial market in order. And lastly, this whole cloud that's hanging over South Africa in the form of carbon tax that needs to be taken into account. Yesteryear, it was a totally different scenario. We had relatively low cost of electricity. We had consistency of supply. We even decommissioned some coal-fired power plants from an Eskom point of view in the early to mid-80s. Absence of demand-side management programs, which is a good sign of an environment that obviously has enough capacity to move forward in the form of electricity supply. And then lastly, the absence of a tax position on emissions. And this whole aspect around carbon tax, I think that's going to create quite a nightmare, quite a storm moving forward for both the private enterprise as well as the public. So it's going to be quite interesting to see what actually develops out of this in the next coming while. So getting back to energy modelling and planning, is it about a sustainable model driving an energy investment horizon? And I guess some of the questions you need to ask yourself in your own businesses as well as your own organizations is, number one, are you taking external factors into account, right? Are you looking at the broader energy model in your company before you make specific decisions? Secondly, the future perspective, right? Are you taking the future into account? Or are you merely having a look at the fundamentals of baseload, which is historic data? Number three, use of scenario planning to align investment strategy, critically important. Plug and play integrated reporting, it's becoming far more important now. If you look at the Johannesburg Stock Exchange, integrated reporting is evolving. We're one of the leaders globally in this regard. So how are you contributing to your integrated reporting? Is it off a solid base or is it a bit loose? Lastly, sustainable cost mitigation. This is a critical aspect. Many companies make a huge mistake by looking at the core business and then attaching energy generation onto that as a subsidiary business of the bigger picture. Shouldn't you rather be mitigating your costs, looking at the broader energy model and freeing up cash flow to your core business operation? So if you've got one or two questions on any of these bulleted points here today, I think that energy modeling and planning is certainly something that you should be considering and you should be researching about to make sure that you're making the correct investment decision moving forward. So Deloitte publishes a number of papers year in and year out, right? And this particular paper here was the Chief Financial Officer's insights into sustainability. And effectively what we looked at a sample base and we contacted at various tiers of the economy different CFOs, right? The contributions that came back from the survey were pretty clear that in the last 12 months, these CFOs had a significant increase in their accountability around strategic sustainability. And that's a total of approximately 53%. But the trend is not stopping. Moving forward, projected over the next 2 years, we're looking at in excess of 60%. Just take note that this research was originally conducted in 2012, so this number would even be higher today. Right. So the whole aspect around sustainability strategy is becoming more and more important. And isn't it interesting that your Chief Financial Officer is slowly but surely accepting more accountability in this regard to obviously drive forward? So somewhat contentious, right? I appreciate the fact and I respect the fact that there's one or two IPPs in the room, there's technology owners in the room, but one of the most misleading factors when companies invest in renewable energy, that's purely based on the factor that it's not invested on a broader energy model, it's invested on the specific technology that that provider is bringing to the table. That provider is intrinsically married to his particular type of technology, which obviously increases the investment risk decision of the company. How do we mitigate that? Again, looking at the broader approach, an all-inclusive approach. You have a look at fundamental steps that need to be taken to obviously understand your broader energy position, and thereby your output out of an energy model will ultimately give you some core scenarios that can be considered by the board in order to make those prudent energy investment decisions. Lastly, reducing peak demand is about the commitments to the chosen strategic decision. We're going slightly off track here. I just looked at the brief of the conference today, and I think it's something that's relatively important. We talk about peak demand, etc. How do you deal with it? Well, as a start, as a country, why don't we start by giving full commitment to some of the strategic decisions that we are making and driving forward from that base. I'm going to take you through 4 or 5 slides very quickly, right? And don't be frightened about the information on this slide. I think we'll just move over to a slightly more looser slide, right? But let's take Angola and Mozambique. So effectively, the way you read this, everything that is either dotted, right, or blocked out in an empty block gives a representation of a study that was conducted between 1999 and 2010, right? And that covered renewable energy generation, total terawatt hour, to real GDP growth percentage year on year. We then have a look at a slightly different environment where we look at the period 2011 to 2023. We look at renewable energy generation, which is a solid green bar graph at the bottom. And we look at real GDP growth percentage year on year, which is, of course, your line graph running at the top. Now, on what base do you make a decision as an IPP as to where you should be playing? And on what base, as a consumer within the country of electricity, do you make a decision as to what types of technologies you should be dealing with? And just to represent the ambiguity here, if you have a look at Angola, right, you can see that the projected renewable energy generation is obviously growing, but if you look at the negative graph, as far as your real GDP growth percentage year on year, it doesn't seem to be a firm correlation around that. I mean, why would renewable energy growth, where you've got a slightly negative trend as far as GDP growth goes? Then have a look at Mozambique, which is a slightly different scenario, where you have renewable energy generation as a factor of terawatt hour, right? But have a look at the real GDP growth projected forward year on year. It's a complete mismatch in approaches. Right? And this is for the exact reason that you require a broader energy approach. You need to take energy modeling and planning into account. You need to take all the attributes around energy policy, energy economics, technology, geographic aspects, politics, before you can make any prudent decision. And in my personal opinion, that's where the vast majority of renewable energy companies have possibly fallen short to date. And this is certainly a discussion that's taken place on the global conference circuit today. How do you assess the broader picture in order to make a prudent decision? I'm not going to spend too much time on this. This representation here, real GDP growth to electricity net consumption. I mean, just have a look at South Africa, that is self-explanatory. Have a look at 1 or 2 other countries. Again, you can't make these decisions in any form of isolation. Right. So what are the fundamentals of energy modeling and planning? From a Deloitte point of view, we see it slightly differently to the conventional industry around energy efficiency. Number 1, we have a look at a future perspective. Okay? We avoid the historic positioning. Historic data is good to build a baseline, but it's very difficult to make decisions on, right? You need to understand what's happening from an economics point of view and policy, etc. Moving to the next point, which is an all-inclusive approach, which deals with energy economics, energy policy, technology, geographic aspects, as well as politics. Scenario planning is very, very important as well, right? You need ample options available to you before you can make a prudent decision. It's not a linear decision that you're making here. You're looking at numerous scenarios, right? And based on the integrity of those scenarios, you're making a decision one above the other. That is what strategy is about. It's about having accessibility to those options. And then lastly, a qualified investment horizon. How can you even think about making an investment decision unless you've got a qualified investment horizon moving forward of at least 15 to 20 years from an energy point of view? Every energy decision that is made takes a substantial amount of time to implement and execute and commission, right? So you do not have a short-term horizon. Your horizon is certainly of a medium to long-term nature, spreading at least 15 to 20 years. So what is the industry doing today, right? From a Deloitte point of view, we've had a good look at this. Number one, energy efficiency is obviously extremely prominent, okay? And it has its place. Administrative bid management, right? And then lastly, financial modeling. And if you take all those aspects into account, you do have a realistic horizon from an independent power producer point of view on the one hand, but on the other side of the fence as the demand consumer, energy efficiency obviously plays a role, and you can make certain decisions looking at the financial modeling. But the point that I'm making here is that you need all of this on the right-hand side as well to make a prudent decision. Right? Times have changed. Our environment has changed. Electricity prices are increasing. Energy security risk is a massive issue. Demand side management, this cloud around carbon tax is obviously going to have a huge, huge impact. So having a look at this, the concerns about the status quo and the path to risk mitigation. What we've looked at here is on the y-axis, we looked at medium to long-term risk mitigation probability, the probability of mitigating your risk moving forward. On the x-axis, we've had a look at sustainability. So the analysis that we're doing here, we are having a look at three scenarios. Yesterday's value proposition, effectively around energy efficiency. We're looking at the re-engineering of yesterday, looking at past data as well as current data, possibly over the next 12 months. And then we're looking at a very strategic situation around energy modeling and planning that is including energy economics, policy, politics, geographic aspects. How does that affect your risk mitigation probability? Again, having a look at yesterday's value proposition, it's about baseline data, right? You're not mitigating your risk to a reasonable level, right? Your sustainability is relatively low. Having a look at the re-engineering of yesterday and looking from there down a 12-month horizon, it certainly improves a bit, but it's not an optimal position, and you're going to have to reinvest year in and year out, every 2 to 3 years, to find a position where it's optimized. Yet with energy modeling and planning, it's a totally different scenario, right? You're making the investment up front. You're making projections, you're forecasting, you're understanding the economics, the policy, the politics around it, the geographic aspects, and you're finding a path moving forward, right, in order to make the correct investment decisions. So you're investing up front, and quite frankly, after that, your sustainability will naturally increase due to the fact you're committed to your strategy, and from time to time, you may be in a position to, of course, calibrate the model based on certain events such as policy, economics, global economics, etc., that are taking place. Right, so is this too different to what you do in business on a day-to-day basis? So if you are already investing in your company, right, in your organization, to optimize your organization, etc., why are you not doing this from an energy point of view? And I was just to make note of the fact that the context of energy here is far broader than electricity, right? From a healthcare industry point of view, it could be electricity as well as fuels that goes into the logistics vehicles. Relatively broad, okay? So contain cost. Don't we naturally do that? Don't we have a look at security of supply in your standard supply operations? Don't we look at managed exposure, business sustainability? Don't we look at integrated reporting? Right? So why are you not doing that from an energy point of view? The only difference here is that we're looking at the broader energy environment, and we're stating on the left-hand side, right, we're looking at the fundamentals of energy modeling, policy, politics, geographic aspects. On the right-hand side, we're bringing a very firm approach to scenario planning, okay? And that's coming together. So if you already subscribe to good business principles, this is really merely just an add-on to the process to make sure that you make those prudent investment decisions. Very quickly, we're not going to spend any time on this, but quite frankly, our approach at Deloitte is relatively simple. Okay? Number one, it's a strategic approach. We get the scenario ahead us right. We get the understanding right from an energy sector point of view, as well as your industry sector. So we have a firm understanding as to what you require, be it in the healthcare sector, the mining sector, etc. Followed on to that, we then move into a phase of transient simulation, where we look at the impact of different types of technologies on your environment. Not that we pinpointing any specific technologies as an outcome at this point, it's just an understanding. And we also have a look at development of the broader energy model, taking these macro aspects into account, taking energy economics, policy, politics into account, both quantitative as well as qualitative. Moving into output scenarios, and generally we would have about 2 to 3 core output scenarios that would be considered by the board, right? And the board would make a decision as to which path the company is heading down, and accordingly you would obviously plan your operations. Then moving to the right-hand side, it's all about execution as well as calibration. So it's all very well having industry-led insights and insights that are supported by very deep analytics. But at the end of the day, if you can't implement and you can't execute, there's no point in even starting the planning process. So you need to keep that at the forefront of your mind when you start a process such as this, that is very practical, and you need to find the correct fit in the market to obviously make the necessary impact and the ability to implement. So some of the key steps, and we'll run through this very quickly. I mean, understand your requirements in a practical manner, right? It can't be too loose. One of the questions that came out earlier today from a renewable energy point of view, okay, a question centered around, why are we not just investing in renewable energy? Why are we not just making it an easy policy environment, okay, just to expand this renewable energy uptake? There's a very good reason for that, right? There's a reason that renewable energy can only generate at specific levels. Admittedly, you do have concentrated solar power as well, but it's an unproven technology today. Okay, so you need to take a prudent approach to it. You can factor it into your decisions as you move forward, 5, 10, 15 years down the line. But it's certainly something that you need to be cognizant of today, right? That you need to keep the model practical. I mean, very basically, build the model, drive the sourcing and procurement process. As important as anything else, this comes back to the executability, the implementation, the ability to implement. Infuse capital efficiency solutions, implement. Lead the optimization of the energy model over short, medium, and long term. When we engage with clients, we back with clients every 6 to 18 months, calibrating the original model. Right, so possibly just a few points to take note of. Mr. Chair, at this point in time, I'll be happy to take any questions if there are any questions.
Thank you very much. We'll do questions after the next speaker.
Thank you.
Thank you very much, Gareth Gregory from Deloitte. And yeah, you want to take some
Okay.
Thanks very much. Have a seat over there. I'd like to now call on Mr. Duduzi Lamini.